This is the morning brief from the Economic Times.
खूबसूरत लम्हों को, पंख लगे सपनों को हम आपके सामने पेश करते हैं। ज़ी टीवी, हर लम्हा नई उम्मीद।
In the summer of 2019, Punit Goenka pulled a rabbit out of his hat just when he was poised to lose control of his family's crown jewel, Zee Entertainment. As lenders and sultry creditors were banging at the gates of the media empire his father had built. That rabbit was Wall Street fund manager Invesco Oppenheimer Developing Markets Fund.
In a significant transaction to solve the debt woes of SL Group, Oppenheimer will buy an 11% stake in Zee Entertainment for over 4,000 crore rupees.
So the total debt on the promoter's books is 11,000 crores, of which we would have paid 4,224, which means we are left with less than 7,000 crores of debt, about 6,800 odd. Our endeavor is that by 30th September, we would repay even this.
That was Punit Goenka, CEO of Zee Entertainment Enterprises Limited. But what was left unsaid, but had swung the deal in Oppenheimer's favor, as opposed to a competing one from Comcast, a US-based media giant that had partners like Blackstone Private Equity and an investment vehicle of James Murdoch, was that Punit Goenka retained the right to run his company, even as the shareholding of the founding family was down to low single digits.
The way company Zee is run since its inception is very different from other companies. It's run as a very tight ship. In terms of margins also, if you see, the cost of production is much less compared to other companies. If you see last year, the pandemic year, the company has a top line of around 7,800 crore, EBITDA margin of around 1,800 crore and net profit of 800 crore. Nobody else has run this kind of operations. That is why I believe Oppenheimer remained stuck with the same management. Oppenheimer has been a financial investor in Zee since 2002, right? They owned a 7.7% stake. And when they decided to acquire another 11% at around 400 rupees per share to bail out Zee, that showed their confidence in the current or existing management. So I don't think there was any reason for them to destabilize the management and change the board at that time.
That's my colleague Gaurav Laghate, who tracks the media industry closely and has been on the top of the developments at Zee. And why shouldn't he be? He's been tracking the company for over 13 years now. But 2 summers later, cut to 2021, that honeymoon seems to be over. The same Oppenheimer fund is now gunning for Goenka's head and has sought an extraordinary general meeting to reconstitute the entire board with 6 new independent directors of their choosing. A motley of retired bureaucrats, consultants, lawyers, and bankers, among others.
Everything was building up to shareholder activism. The examples that you cited, where the promoters lost their crown jewels, Vijay Mallya lost United Spirits, which was a huge cash-generating machine, lost CG Power, Rana Kapoor has lost S Bank. But at the end of the day, this all comes to the prime, which is whether you are running your company from a good governance perspective, whether you are taking all shareholders along with you. All these come to the fore.
Shriram Subramanian runs a proxy advisory services firm, InGovern, out of Chennai, that fights for the rights of the minority or small shareholders, much like you and me. Firms like his have been critical about Zee's governance standards, and just before the company's annual general meeting that took place this past Tuesday, even recommended shareholders to vote against renominating 2 board members, Manish Chokhani and Ashok Kurian. Coming up on the show, what led to this souring relationship? And now, what happens to Zee? Will the Goenkas yet again find a white knight and save their crown jewel by the skin of their teeth? Or is it all set for a takeover? From the Economic Times, I am Shashwat Mohanty. It's Friday, 17th September, and this is the Morning Brief. I wanted to understand why Shriram was going after just two directors while being okay for the remaining eight.
If you see the commentary that we wrote, we said that the entire company is due for a depromoterization because the promoters hold only 3.99% shareholding and exert control over the entire company. The company is ripe for a depromoterization. One. Two is the board members, all the board members need to be refreshed because at the end of the day, it is under their watch that the related party transactions have continued to flourish, or they have not accounted for the put option in Mauritius, and the auditors have qualified the annual accounts of 2021. And they have also paid a compensation increase to Mr. Punit Goenka of 40% this year, and none of the other employees are getting even a single rupee of compensation increase. So, what is this entire board doing? So, only reason why these two directors were sort of targeted or were because their appointments had come up for renewal.
The two directors, Kurian and Chokhani, quit promptly right before the AGM.
In fact, two of the three directors it sought removal of, Manish Chokhani as well as Ashok Kurian, they've tendered in their resignation already. The timing of this letter is extremely important as it's ahead of Zee's annual general meeting today.
But perhaps what ensured that a friendly, passive investor push of the nuclear button was the falling share price of Zee, despite the overall market rally. It's down 53% from the price Oppenheimer initially agreed to buy it at.
The only thing what went wrong with Zee was, I think, what Mr. Subhash Chandra wrote in his open letter also, that he made some bad bets in infrastructure and other businesses, and for which he took money from lenders, which became difficult to pay back, and which is why he had to sell Zee stock. And a lot of his promoter shareholding in Zee was kept as collateral for that. As once the issues came out, when people came to know that Zee stock is pledged, that is when while the intrinsic value was good, but people started to hammer down the stock.
The market thus cheered when the news of the boardroom fight became public this week.
Zee Entertainment stock might be soaring in trade, but the company has found itself in the midst of a boardroom battle days after proxy advisory firm IIAS raised a red flag on the reappointment of two directors,
Giving people like Rakesh Jhunjhunwala, the big bull of the Indian stock market, and Bank of America to buy into the opportunity in anticipation of a change of guard. Or better still, a takeover.
Zee Entertainment had a lot of bullish calls on Tuesday's trade, and the biggest one of all coming in from none other than Rakesh Jhunjhunwala, who bought 50 lakh shares of the company, which calculates to about 0.5% stake in the firm. Jhunjhunwala's stock trading firm Rare Enterprises picked up Zee Entertainment shares at a price of 220 rupees, which means his total investment was over 110 crores. This came on a day when the shares surged over 40% as shareholders demanded the ouster of Punit Goenka, the last promoter member on the board.
It's valued much less than what the intrinsic value is. This everyone believes. The moment Invesco, the largest investor in the company, came out with a notice saying that they want to remove the promoter completely from the board, it sent out a strong signal in the market. And when they said that 6 new independent directors, I think the market believed that now the company will be run by more independent directors and there will be more scrutiny of lapses of corporate governance issues, which is apparently they think is a very good sign for the growth of the company and creating and unlocking value. That is one. When Rakesh Jhunjhunwala and Bank of America, they have picked up stake, it seems that there might be something cooking. Maybe some people are looking at Zee at this value, at current value. It makes for a very good acquisition target.
Governance lapses have been an issue prior to this as well. In November 2019, just months after their appointment, 2 non-executive directors, Subodh Kumar and Niharika Vora, quit, alleging that governance lapses on matters such as treasury operations, related party deals, film financing, and corporate social responsibility expenses.
The promoters who owned more than 50% shareholding at the end of the day have had to lose their shareholding because of the pledged shares, and 2 years ago they sold off their shares because the pledges were enforced, and they are left over a period of time today with only 3.99% shareholding. So these related party transactions have led to the undoing of the promoters. But of course, to some extent, the promoters have ensured that this company itself doesn't have any debt on its books as of now. It's a clean books. The operating cash flows of Zee as a company and a group continues to be strong because it's still the largest media company in India and across many verticals and across regions and across various formats. And it has very strong operating cash flows. But at the end of the day, the governance lapses, if you see, even this year, as I mentioned earlier, they have not ensured that the put option of some 380 crores or so, which was there in the Mauritius subsidiary, has been recognized as per the Ind AS standards in the financial results. If it was recognized, the profits may have been a different number altogether. The board should have ensured that that was recognized as per accounting standards, which they have not done. And the knock on effect on a good operating company is something that investors are bearing the brunt for. And that is the reason the stock valuation has not gone anywhere. It was probably undervalued till yesterday and grossly undervalued.
The malaise that has been a handicap for the entire group. Group company Dish TV, run by Goenka's uncle, is also seeing a similar activism. Yes Bank, which also owns a quarter of the company, has sought the replacement of Jawahar Goel, the company's managing director, who also happens to be the younger brother of Subhash Chandra, also Punit Goenka's father. But back to Zee. Let's focus on the operations. The fall in share price coincides with a drop in ratings. Stiff competition from OTT platforms have made life much worse. Without a marquee property like IPL, not that Zee didn't try, it floated the Indian Cricket League or ICL back in 2007, which ended in 2009. Some analysts do believe that the management has been trying to address investor concerns by defocusing on sugar box investments and focusing on building a strong content library, ramping up OTT operations, and aggressively pricing its offerings.
From my conversations with Zee management over the years, and I have been tracking this company for almost 13 years now, barring one or two bad years, they have consistently, beat market expectations. Their advertising revenues, their distribution revenues, they've always been good. Have created good value for minority shareholders. Yes, the last 3 years have been bad, but I think the way, again, as I said, the way they have been running Zee as a company, I don't see any problem. The only issue was with the promoters, which is why the whole issue was. But if you see now, the whole broadcasting sector is also changing. So now they have to focus more on the digital part, and digital requires a lot of investments, right? So Z5, their digital platform is nowhere close to, say, a V Plus Hotstar or a Netflix or a Amazon Prime Video, which is where they will have to have a serious look. Even in the AGM yesterday, Punit talked about how this will continue to be in the investment, Z5 will continue to be in the investment mode and will be the focus going forward because it's already available in 190 countries now. They will be ramping up original productions, acquisition of films, which they have been doing. So the acquisition of Radhe, for that matter, or, film worked or not, that's a different thing. But it's a big film, right? The partnership with TVF, for that matter, or picking up one show, that Friends Reunion. Of course, it's difficult to compete with the deep-pocketed tech players.
And this is exactly where Oppenheimer needs to step in and address the alternative plan it has in mind. Even the caliber of its new members it has recommended remains largely untested.
It is not clear what the new plan of Invesco is. Each of the six proposed new directors don't seem to have any industry experience and credibility to run a media company of the size of Zee. So, who is going to be the face of Zee? Who is going to be, if Mr. Punit Goenka is removed, who is going to be owning and running and guiding the company in the future? Invesco will have to either put it out before the EGM or have to convince the other shareholders that they have a plan in place.
Is Zee primed for an acquisition? If yes, who are the potential suitors? Previously, Sony evaluated a merger, and Street Chatter says Reliance might be poised to capitalize on Zee's current mess.
At present, Sony I doubt, because Sony was looking at acquiring it when I think 3 years or 2 years back, when before they sold stake to Oppenheimer, now Invesco. But I don't think Sony will be interested anymore. Sony also tried to acquire or merge with Viacom, but that deal also didn't go through. Reliance, no, interestingly, the buzz has always been there. Since May, I believe there has been a buzz. There have been some reports. And if you see logically, it makes a lot of sense for Reliance to acquire Zee, because the businesses complement each other. What Reliance lacks in entertainment is the regional, the regional access, while Zee is very strong on regional with 49 channels and all. Zee's main channel, flagship channel, Zee TV, is losing some market share, which is purely urban channel, while Viacom 18 has a very strong urban presence with Colors and MTV and other channels. Now the thing is, if these two merge, it will be a very good competitor to, say, a Star and Sony, and overall it will be one of the largest. But will that happen? It's difficult because there are too many parties involved, and the way the culture of these two business companies is very different. So will it be a cultural mix? I have my doubts.
Oh.
It's very difficult to do a hostile takeover anyway, right? And say anyone who wants to acquire Zee now will first have to get Invesco's shareholding. Invesco acquired some 11% stake at 400 rupees a share, right? Once anyone goes after Invesco, they have to go after other financial investors, again, who will be looking at least 400 kind of a market price. That is one. And even then, you will have to make an open offer, because once you reach more than 25%, you will have to make an open offer. That is where the cost will go up for the acquisition cost. So it's difficult. It's difficult.
A lot would depend on how shareholders vote. Zee's ownership is highly fragmented. Oppenheimer is the single largest, but owns only 18% of the company. Next in line is Vanguard, another large foreign institutional investor with 6%. Homegrown life insurer LIC has a 5% block, and they will play a key role, as would HSBC and Amansa. Domestic mutual funds and insurers SBI Life, HDFC Life, Nippon Life, Aditya Birla Sun Life, ICICI Prudential, Kotak Equity Arbitrage, all these funds have some positions in the company. Mutual funds have been known to be soft on promoters. They have given them a get out of jail free card, even when the promoters owed them money. But Invesco now wants to remove Punit Goenka outright because they've called for an emergency general meeting. It would take 50% of the members present at the EGM to sack him.
Indian mutual funds were more than generous about 2 years ago when they entered into standstill agreements with the promoters for loans and pledge of shares and etc. But now it is not clear, because whether they have such sort of largesse which they will extend to the promoters, because one, they did get a rap on their knuckles by the SEBI as a regulator for entering into standstill agreements. Two is mutual funds are being increasingly pushed to look after the interests of their unit holders rather than act in this one of the promoters or their investee company. For all you know, backing the promoter could still be the best case scenario today, okay? Because Invesco has not articulated a plan out there. There is no alternate face that they have put out there. The shareholding is really fragmented, and so it is not too much of effort for the investors if they have a compelling story. But at the end of the day, the view, as I said, the concerns remain as to what is the alternate plan. And this is where the investors with whom we have been talking to have also expressed this concern. And so there may be one class of investors who may still back Mr. Punit Goenka there could be a possibility of a white knight appearing between now and the AGM, which is 45 days down the line.
Punit Goenka won't sit too tight. This is about all he has left.
The company is not saying anything at present. The only statement officially they made was that they will take all the necessary action as per applicable law. However, my sources inside and outside of the company say that first of all, it's very difficult for the proposal to go through. It's a very difficult thing because yesterday also during the AGM, we saw a lot of minority shareholders all praising and backing him and the family and the current management. And the two other directors which they had an issue with, Invesco had an issue with, they have already quit. In fact, IIAS has also come out with a proposal, with a recommendation asking the shareholders to vote against their reappointment. So they are out. I think Punit Goenka will continue to be there if he leaves from the board, and then if they decide to make a management change also. Who can you get to run a company like Zee? That's a very big question. It's not easy to run a company like Zee. I think it will be, if they try to do that, it will just run the company to the ground. I don't think him leaving anytime soon as such, but stranger things have happened.
A series of mistimed and expensive diversification bets in infrastructure made Subhash Chandra's SL Group a bloated conglomerate. Chandra's investment companies had borrowed heavily from mutual funds and non-bank firms to fund road and renewable energy projects. And the family had pledged Zee shares to obtain these loans, but were forced to sell and repay after lenders threatened to offload them in the market in the case of a default. This resulted in the Oppenheimer investment that brought in a temporary reprieve. Now, the same friend has turned foe and wants radical changes to recover its losses. The 40% surge in the stock is perhaps the best indication that even other investors want change. Will activism prevail, or will a white knight come to light yet again? We will know over the next few weeks. Our guests had differing opinions on the future of Zee, but what is a certainty is that this will be a wake-up call for many across corporate India. I am Shashwat Mohanty, and you've been listening to The Morning Brief. This episode was edited and coordinated by Diya Rekhi. I hope you enjoyed listening to this episode. We look forward to your feedback. Write to us at themorningbrief@timesgroup.com, and if you like the episode, please share it on your social media handles. We'd really appreciate it. The Morning Brief airs every Tuesday, Thursday, and Friday. Thank you for listening and have a great day. All external sound clips used in this episode belong to their respective owners. Credits are mentioned in the description.